Hello, everybody. It's an honor to be here with you today. It is almost a coincidence, and I want to tell you a little bit about the reason it's strange that I'm standing in front of you, actually. In 2015, I was finishing my PhD in environmental science. I had no interest in finance whatsoever. I was deep in my own world in industrial ecology, and I was going the academic route. And I got a position at the University of Southern Denmark, and me and my girlfriend, we moved there. We had no children. It was those that have children, you can imagine how we had all the time in the world, and we were just working on research, and it was good. I had a discussion with a few friends of mine at the time who had done the same thing, and we were thinking, couldn't we put our knowledge that we are gaining here at the university to some practical use? So we founded a little company called Circular. It was a small consultancy. We had no projects. We had nothing to do. So it was just a little company that was just lying there, and we had no business. So we got another friend of ours who had an MBA, had been working in the finance sector, and he came to us a few weeks later, and he said, you know, there could be something. Let's have a meeting with this guy. They're thinking about issuing a green bond. And I said, what the hell is a green bond? I have no idea what this is. So we had the meeting, and he was asking us about the structure of a green bond framework and how we would do the calculations for the impact, etc. And I saw there was something there. This was something interesting. So it kicked off. The first green bond issuance in Iceland was the city of Reykjavik. We structured the framework. We followed up with the impact reports, helped with the roadshow. And other projects followed, Reykjavik Social Housing, Reykjavik Energy, and multiple others. So we were really in the center of the green bond movement, should we say, in Iceland at the beginning. This was cool. There was something there, and I really, really liked it. But you know, I had gained this experience in environmental science. Was I just going to throw this all away and just move into finance? Because finance had really caught my attention. And I loved it. I loved the thrill of this. So this was where I was looking at. I had the environmental science and I had the financial markets together, and I was in one world, I was peeking into the other, and it was more and more gaining my attention. So much that I decided to leave academia and only focus on Circular, but we were getting other types of projects as well. Life cycle assessments, you know, the regular stuff that would come in, and we would do those projects and deliver them, but the financial stuff, that was really what I was interested in. The emission trading scheme, dealing with futures, this all, you know, I really only wanted to be in the right circle. So at one point, I decided that I had my second child, and we decided that I was going to leave Circular. It was sold, KPMG bought it, and I joined Landsbankinn, who is Iceland's largest bank. If you are not familiar with the collapse of the Icelandic financial system in 2008, this is one of the banks that went under. But I joined it and got licensed as a securities broker in my country, took all the relevant exams, and then I could really, really join these two. And currently I'm playing in the intersection of these two things, and it is amazing. It is, for an environmental scientist today, this is the most exciting field to be in. It's like being in software development in the 70s, you know, it's just like, it's thrilling. So anyway, people ask me, I met an old professor of mine the other day, and he said, well, where are you working now? I said, well, I work at Creditinfo. So I left Landsbankinn. The head of markets left, joined Creditinfo. She took over as the CEO, and she asked me, do you want to build a platform for the financial sector, delivering sustainability data into the financial sector? I said, fuck yes, I want to do it. Sorry, this slipped. So I said yes, and I joined, and that's where I am now, and it's a lot of fun. But he asked me, what are you doing in finance? Doesn't make any sense. Well, I asked him, well, it's the merger of the two, same picture again. And what we do there is we try to consider environmental, social, and governance things. We try to make sense of these principles, and we feed them in. And we'll evaluate how, if companies are using this and creating value, if they are partnering with each other to minimize internal costs, and if they are integrating this into their business and disclosing relevant information. Oh, that makes sense, he said. So today the talk is, I decided to take what I think is mostly interesting. It's not supposed to be super educational, but more entertaining. So lean back and enjoy the next slides that I will have for you. The first I'm really interested in, so I'm speaking, am I speaking close enough to the mic? Yes, I guess so. First thing I want to talk about is the number of signatories in PRI. This is the Principles for Responsible Investments. And we see that they have skyrocketed. The financial market, this is an indicator of how well the financial market is connecting with sustainability. And this has grown, and this is worldwide. And we see the number of signatories is somewhere around 4,000. Assets under management around 120 trillion US dollars. So this is not necessarily a niche thing anymore. This is mainstream happening worldwide. And it's been mostly unregulated. We see regulations starting to appear in the European Union in the past years, but mostly this has been unregulated. And it's been creative. And I think that there was a period where people like me were working inside companies and financial institutions very closely with PR, which was not nice. And then now it's very much with compliance, with the legal. I guess there's a lot of lawyers in here. I am going to say this is temporary. But there was a sweet spot in between. And that was thrilling and creative, where we were issuing bonds, creating funds, deposit accounts. You know, it was just all the whole suite, and it was unregulated. But it was not bad. It was very good. I'm saying it was unregulated, but it worked well in most cases. So these are the types of bonds that we see related to sustainability: green, social, sustainability linked, and then transition bonds. I want to speak about two types of these bonds now. One because it's been very prominent, the other because I think it's going to be very prominent in near future. So the green bonds, these have been most talked about publicly, and we see in Europe, Europe has been leading the issuance on green bonds worldwide. But what I think is going to happen in near future is this over here. You see on the picture on the right, we see on the bottom, did you see? There was a tiny sliver at the bottom. I'll show you again. Dink. This is the issuance in Africa. Hardly any. But you can imagine this is going to be where the largest developments are going to be in near future, and we're going to see a lot of impact coming from that area. So I think we are going to see the growth in green bond issuance in Africa. It's going to be a lot in the coming 2, 3, 4 years. Asia Pacific, Europe, Latin America, North America, and supranationals. We see Europe being the largest in 2022, by far the largest. But I think Africa is going to lead the development in the coming years. The question is, how does one issue a green bond? This, what I'm about to show you here, is not coming from the regulators. This is something that the market has basically developed themselves. And I'm going to show you, I don't know what it's called, when you give birth and there's this extra thing that comes out. It's called the tree of life. Placenta, yeah. It looks like a placenta. It's beautiful. So we have an issuer who wants to issue a green bond. They might think they will get a greenium on the market, they will have better access to finance. So the issuer begins by creating what's called a framework, where they say what they're going to do with the proceeds of the green bond issuance. Now, the framework is then, they want to receive a second-party opinion from a third party, a second-party opinion. And these are companies like Sustainalytics, Cicero, etc. And they are they basically provide a document that tells the investor how the framework aligns with the green bond principles, which is something developed by the ICMA. Now, so they provide the second party opinion, and the issuer now has the framework, they have the second party opinion, they are ready to go. They have a roadshow, they meet the investors, and they get financed. So they are now sitting on a mountain of cash, and they have decided in the framework what they can finance. So they go out, either they do their own projects or they lend money to the companies that are in their portfolio that are eligible under the framework. This is all nice, but then the investor expects annually to receive a report that outlines the impact. What did they use their money for? And what was the impact of the investments? And the second party opinion provider, an auditor, will come and give an opinion on if what is shown in the impact report is factual, and this is then published publicly to the investor. This picture really outlines how the process takes place, and this is a revolving thing that happens until the maturity of the bond. Of course, we see that you have to pay internally for the structure of the framework or for consultant. You pay for the SPO provider. Eventually, you have to create the impact report. That's internal or external cost, and you have to get that also checked by the third party. Again, a cost. So there are costs associated with the process. Let's not be oblivious to that. And you hope to get that cost back and much more when you issue the bond. You think you're going to get a greenium. But it's not necessarily the case. In many cases that is, but not always. But what seems to be the threat here is that you have a larger pool of investors. So you're more likely to close the deal. It's beautiful. It's like a placenta. But the impact, I talked about the impact reports. This structure is very much almost set in stone. The green bond, the European green bond standard, really follows this outline. So the market has really come out, said this works. European Union seems to agree. But the impact reports that are published are not comparable. So for example, we don't have to look far. We see Apple and Google publishing impact reports. And the data that you see there is not comparable. So for example, for Apple, they report on expected impact. Alphabet reports on impact that has happened. So you would have to dig a little bit into the numbers, and this is the case. This happens very often, where you have to look into the data to be able to compare it. I think this is sort of something that needs to be weeded out on how the method to calculate the impact has to be decided in a very technical, detailed manner. That has not been done, and I think these are the developments that the green bond space is sort of looking to address in near future. I mentioned the green bonds and the development in Africa. I think the next thing that's going to happen has to do with transition bonds. So there's a lot of sectors that are not at present day exposed to the sustainable finance market, especially in the bond space. Remember, these are transition bonds, and these are intended for sectors that are needed in the transition to a low carbon economy, but maybe polluting a lot. So think aluminium companies, silicon providers, even train companies, airlines, etc. We need them, but they are not. We need them in the transition, but they are not in the market currently. So environmental finance came out with a piece early 23. Could the year 23 be the year where we see them take off? It does not appear to be so. But I want to point out two issuances that came out in 2022 that very caught the market's eye. First was Japan Airlines issued 10 billion yen. DC, the external provider was Sustainalytics, and they issued a transition bond to buy aircraft. So think about this. They're in the sustainable finance market, but they're issuing a transition bond, and they tell to the investor, we're going to reduce our greenhouse gas emissions by buying, what was it, Airbus A350, Boeing 787, etc. Sustainalytics provides a review. And all of this is public on their website. The second I want to point out is Mitsubishi Heavy Industries. They issued, I think it was also 10 billion yen in 2022. And there they are focusing on the hydrogen economy and so hydrogen solutions. And the use of process is very vague, but decarbonize existing infrastructure, building hydrogen solution ecosystem, build a CO2 solutions ecosystem, whatever that means. But yeah, so we have Mitsubishi Heavy Industries, Japan Airlines issuing transition bonds. And I believe this is going to grow rapidly the coming years. So I think green bond, Africa, transition bonds as a whole is going to explode. And it really opens, so if you think about the loan portfolio of a bank, if you think about if a bank would issue transition bond and green bonds, social bonds, or just a sustainability bond and a transition bond, there should be majority of the portfolio of the loan book should be exposed to the bonds, which is quite nice. I hope I'm good on time. Went on a bit of a story trip here in the beginning. So I want to talk a little bit about the equities. Remember, I could create the slideshow as I wanted, and I only want to talk about things that interest me a lot. So I finished with the bonds. Now I want to talk about equities. And there are very, very interesting developments happening there. And I want to talk about a specific company that caught my eye, and maybe many of you as well. You may have seen them in the news. But that is engine number one. Now I'm in, just a disclaimer, I am in no way connected to this firm ever. I am just interested in what they're doing. So they run 3 ETFs. One of the ETF is a classic S&P 500 index fund, but they vote every time. The ticker is VOTE, vote. So it's an exposure, a vehicle for the retail investors to invest in a low-cost index fund, but they always go and they vote in the favor of climate. The second they have is with the ticker SUPP, for supply chain, and they believe that supply chains in the US are going to be moving to the US, and therefore they've developed such an ETF to be exposed to that. But what I want to talk about here is the third one with the ticker NetZ, Net Zero, where this is also a transition vehicle. So I want to show you what they invest in. So this is the portfolio. It's a concentrated portfolio, and we see here very interesting names. So ExxonMobil, Airbus, we have General Electric. You know, this is waste management. These are companies you would normally not see in, should we say, a green or an ESG aligned portfolio of a fund. But their thesis is that these companies are key to reduce greenhouse gas emissions, and instead of selling them, they want to own them and they want to have a voice inside. You see, there's Exxon here. They became quite interested in Exxon, so interested that they ran to get board seats in Exxon. So they had a website, Re-Energize XOM, which is a ticker, where they had a long presentation about why they could maximize the value of Exxon if they would get on the board, etc. And the website is still live, so even though the whole event is kind of gone, it's a very interesting thing to look at. It's still up. They said that they want to enhance value for shareholders and that ExxonMobil must change. They got 3 board seats eventually, and they were backed by BlackRock. And this was covered basically everywhere because it's a tiny hedge fund, and they managed to get on board. I thought, wow, this is cool. So I checked, what's the impact been on the price of stocks on Exxon? So let's just look at it. So since the whole fiasco, they got on the board, the price of XOM has increased 85%. But so has the index. So it's not evident that this has had any effect on the price. It's not been this change has not been reflected in any way in the stock price, it seems. And there was some criticism about they divested some of the polluting parts into private equity, but the pollution is still happening, and now they have to recalculate the baseline for greenhouse gas emissions. But I still think the approach they took was very, very, very interesting. What do I have here? Yes. Another case I want to point out, which I also points out the possible risks of engaging in sustainable finance for banks in particular. So if this is not done very, very properly, and you have implemented relevant processes internally, you can have some, should we say, unpleasant events. So over here we see Deutsche Bank wealth management arm stock price, and I want to, you know that there was a raid done on Deutsche Bank because of there was a person that came out and said that they did not have the relevant processes in place, and this was not completely true what they were saying externally. We see over here is where the raid is conducted, and let's have a look what happens. Well, we see a 28% decline in the stock price over the next 3 or 4 days. Unpleasant, avoidable, if the correct processes are in place and things are done robust. Obviously, the stock price then would end up climbing, and I don't remember what it is at now, but anyway, this little window over here could have been avoided, and the bad publicity as well. So could this have been avoided? So what the first thing people do is they look at the ESG ratings. A similar case happened in Iceland, where I'm from. So one of the banks owned by the government was sold in an IPO and then in a private placement. There was controversies about that, and the bank has an ESG rating. Now they conducted some very grievous. There was a misconduct in the, I think it was the private placement part, and they were eventually fined. And when you look at the ESG rating, they had almost 100% for business ethics, which was even a little bit humorous that they maintained that rating after the settlement. But I'm also interested in the ESG ratings and where they're being used and do they matter. So there's a whole ocean of ESG rating providers. Here's just a few of them, just the largest ones. And the list is almost infinite. Everyone has their own proprietary methodology. I'm not going to stand in front of the screen so you can see. But there was a very interesting research that came out of MIT last year, 22, by Florian Berg and his colleagues, where they took the ratings from 5 of the largest rating houses. They normalized the scale because everyone has their own scale. And they just checked, do they agree? And they disagree a lot. On the y-axis over here, we see the names of companies, and the list is actually much, much longer, and different colors or different rating houses, and you see it's like a painting by Jackson Pollock. It goes all over the place. People will say, well, this is then nonsense, but I say, well, it's not. It is simply a sign of how immature we are and early stage in this whole field, and that's what is making it exciting. And now the European Union is also looking at the ESG ratings, but they're being used. So here we see some of the largest asset managers and their assets under management directly related to ESG. This is in billions. BlackRock, Amundi, DWS. They have the largest amounts in there, and we're talking, these are not some pocket change. I think, yeah, BlackRock is almost up to 400 billion. And we see BlackRock also. Here we have the largest mutual funds and ETFs, Article 8, Article 9 on both ends. This is language common in the SFDR on the, should we say, the greenness of funds. And we see for the mutual funds in Europe on the left, Article 8, BlackRock, we see BlackRock is sort of dominating this particular space. But then how do we incorporate this into the risk management? How can we avoid the graph I just showed you earlier with Deutsche? So So we need to talk about sustainability risks, and we need to have a common language. And the language has been defined. It was originally defined by TCFD, and they talk about climate risks. But we see this is also moving into the same language, but they're also talking about social and governance risk in the same way. And it's quite nice, it's elegant how they've categorized climate risks. So we see transitional risks. This is the risk that we see when companies or the sector or the economy is transitioning from to a low carbon economy. And we see over here policy and legal, technology, market reputation. These are the underlying categories. And this could happen quite fast. We're talking months to a few years. So the EU decides to address something. We're saying there's a window of a few years until we see the first drafts and it becomes a legislation. It happens quicker in the markets, of course. We see a leak out of a company that they're breaking some law in relation to the climate. Let's say they're an aluminium company and they're emitting more than they should, but less than they're reporting, for example. This transition risk happens relatively quickly, but then we have physical risks, and those could be acute, imagine cyclones, floods, or chronic. Now where I'm from, a lot of our sector is based on the fishing industry, and because of climate change, we see that the pH level in the oceans around us may go down, and the acidification of the oceans might impact the fisheries. Now the impact is virtually unknown. We don't know what's going to happen, but we can imagine it's going to be long term. So there is chronic physical climate risk exposure in our fisheries, and it's could be quite costly for us. And we see this appear in regulatory frameworks. SFDR, European Banking Authority is asking for this. In MiFID II, we see this happen. This language appearing here. There is in SFDR, there's just they really want you to be transparent about your policies with sustainability risks. In MiFID II, we're talking about sustainability preferences of investors, for example. So this is popping up everywhere. And the picture I just showed you earlier, that's what is being meant. So what are the challenges going forward? Data availability and quality. We don't have good enough data. That's what I'm working on right now. You're thinking ESG reports, annual reports, that's not good enough. It's done annually, it's being provided by the companies. It's not transparent enough, in my opinion. The legal framework is becoming quite complex. It's like, at least for me, if somebody says to me that they understand the legal framework regarding sustainable finance in Europe, it's like they're saying they understand quantum physics. It's a lie. It's so complex that you can only understand part of it, and you need some group of people to put it together. And then integration into processes. How do you integrate this, especially in the finance sector? How do we integrate this into our decisions? How do we document our decisions? What do we base our decisions on regarding sustainability? This is going to be a challenge, and I think for Deutsche this was the problem. Some of the data that we see is coming out annually. If this data is 11 months old and you're making a decision, I think it is almost useless. You need to put this into context. So there are materiality maps which tell you for sectors which sustainability factors could financially hurt the company if not managed. SASB has one. There are multiple out there. They're quite useful, so we put things in context. But then we have data which is coming out dynamically, and that is where I think one can create an edge. There is the media. We see verdicts from authorities. I'm not talking about courts here, like competition authorities. We want to look at what's happening in the supply chain. Of course, court cases. These and there could be many, many more. And these are data points that I believe, if you have access to, can create you even just a competitive edge in the investment space. So the 3 takeaways I want to give to you before I leave. The first, the adherence to regulations is a temporary pain. I think we are now in a phase where the EU is really pushing regulations on the financial sector. And I think within a few years, this is going to be already weeded out and quite integrated into the financial markets. The second, we need to understand what we are doing and put it in context. I've seen examples, especially when I was in consultancy, where companies were trying to do everything. They didn't know what the investors wanted to see, so they basically provided everything. It's very costly and basically useless. So if we put what we want to do in context, then we can do things much more cheaper. We can create better value. The data can be more rich. And then finally, I want to say this is a multidisciplinary journey. So here, the legal team, the environmental scientists, the engineers, the data scientists, the mathematicians, it's all over. This is not a one disciplinary journey. And I guess that's why you're here. There's a legal firm hosting this event. That's one important piece of the puzzle, but they need to be more of them. Thank you very much.
Thank you, Reynir. It was very interesting and useful presentation. So we have 5 minutes for questions. Okay. Do you have questions?
Hello, thank you very much. How can you explain that, well, we see that in 8 years, what you showed the graphic, that in Africa there were no increase in bonds, and now you say in a few years there's going to be a huge change. So why it's so? Thank you.
Yeah, I think investors, so there were low-hanging fruits in these spaces where we've seen the largest issuers. So if you think Europe, the energy companies, certain infrastructure companies, I simply think there's going to be pressure on issuing green bonds in Africa. I think this is going to be the main driver. It's going to be pressure, and it's going to increase access to finance for these regions. So I think that's going to be the main thing, just to be honest, yeah. I think in Europe we are running out of eligible assets to finance with green bond issuances. This is what I see in my own country, where we've been issuing quite a lot because of the fisheries. And I can see now that we seem to be running out of eligible assets, so we're reaching a peak of possible green bond issuance, and I think this is happening in the sort of the developed parts of the world, at least in Europe. So I think this is the investors are going to be looking for other green bonds to invest in, and yeah.
So is it Africa who's gonna get favor from that, or European investors?
I think both. I think the European investors are going to have access to green bonds, which they may have the request or a mandate to invest in, and it's also going to increase the access to finance for the African issuers at that time, and hopefully at the very favorable rates to facilitate further infrastructure build-up. Yeah.
Thank you.
Hello. I wanted to ask about Iceland. You were talking about global tendencies, but what is about Iceland? What is the main activities for sustainable finance there? So what the most popular use of proceeds, or do you have more green loans or sustainability-linked loans, or what do companies do in your country?
Yes, good question. So green bonds have been the main thing in Iceland. So all the banks have issued green bonds. I think, so one bank has issued in euros, 300 million euros, 900 million euros, two of them have issued 600 million euros, and the use of proceeds has been the fisheries mostly, and then the energy companies have issued as well, quite a bit. So green energy, it basically reflects our sector, our economy. Fisheries are MSC certified, and the energy production is very, very clean. So mostly it's hydro, some geothermal, and this is being financed with green bond issuance. No one has issued a sustainability-linked bond. There are green deposit accounts that 2 of the banks have created. There are social bonds have been issued, sustainability bonds have been issued by municipality. I was part of that process, very interesting, because just to see how investors are gonna relate to that. So that was used to finance schools, sporting facilities, but also sewage systems and other necessary infrastructure. But yeah, I think the next 1 or 2 years there's going to be a shift, because we're running out of eligible assets to finance with green bonds. So I think it's going to be some transition that's going to happen in there. Now the focus is very much on the compliance side, because Iceland is lagging the European Union, because we're not part of it. But we pick up all the laws, basically 1 to 2 years behind. So now we are looking into SFDR, taxonomy, everything that you've already been through. We are now sort of, well, we look to Europe and see what were the headaches happening over there. We try to learn from it, but mostly we don't. And then we try to implement that. So that's what's happening right now. Yeah.
So I suppose your grid, like energy sector, is quite green already, yeah? And the footprint of the country probably as well. So is there a room for improvement?
I would say on the energy side, the carbon intensity of the Icelandic energy grid is somewhere around 9 grams of CO2 equivalents per kilowatt hour, which is very, very low. It's below most benchmarks you would need to issue a green bond. So we can basically finance the whole thing with green issuances, and I think most of it is. So Landsvirkjun, the energy company, they have issued in US dollars. They were actually the first. I mentioned before, Reykjavik, the city of Reykjavik was the first Icelandic green bond, but actually Landsvirkjun issued in US dollars in the US first, but that was not available to Icelandic investors. So most of the energy companies in Iceland, so Landsvirkjun is the energy company owned by the state, but then there's also Reykjavik Energy owned by the city. Both of these have issued green bonds to finance their infrastructure. So most of the energy is already being financed with such issuances, yeah.
And last question.
Hi, thanks for the presentation. My question is about transitional bonds. You mentioned 2 examples out of Japan, but do you see any risk associated with transition risk, and what are they and how we can mitigate those?
Yeah. So I think the reason why transition bonds haven't increased substantially was because I think it was a Japanese shipping company that issued a transition bond, and they didn't follow it. So when they issue the bond, to the investor they present how the decarbonization trajectory is going to be, and what they're going to invest in, and how this is going to play out. And then when it doesn't, the investor ends up holding a very polluting, a bond, company that did not follow up on the decarbonization. So I think there was a bit of a reputation that was lost there, which I don't think is warranted. So how can you mitigate that risk? Well, it's difficult to say. For example, how are we going to say Japan Airlines? Are they going to decarbonize, or are they just going to fly more? Or is it going to be a KPI where they're going to decline, like emissions per passenger? Or yeah. So I'm definitely not answering this question in a good way, but I'm not sure how you can mitigate the risk. I guess having a good team doing a good due diligence on the issuance must be key to see if it's believable, that trajectory that they're presenting, if this is in line with what the experts think could be possible within the sector that the company is operating in. So I think so when you're issuing a green bond for an energy company, which is already with a very low carbon intensity, very little risk. When you have a highly polluting company saying, here's what we're going to do, obviously it's much more risky, but there is the reward could be substantial as well. How can you mitigate the risk? I'm not completely sure, other than just doing a good due diligence. Yeah, and having good transparency on the issuance side. Yeah.